Hello, options traders. While I was out at my pickleball match here this morning, my alert went off on Baidu. It has, in fact, pulled off significantly as I was expecting. So I recommended this short call spread, I think it was just a day or two ago, when we were actually just a day ago when we were trading up here around 139. I said it's likely going to pull back. Many times these things will retrace back down about halfway. I'm expecting that maybe it will retrace into the 120, maybe even as low as the 115 area. But the fact that it's falling pretty fast right now, I can do one of two things if I take a look at this Baidu trade. I'm up 63% in the trade. That's in a day. So there's nothing wrong with just closing that call spread out and taking the money and run. But another alternative here is if I think we're really not going to drop below that 120 or much below that 120, right now we can see I've got a max profit of 173, which is the credit I took in for that call spread. I've got a max loss of 827, which of course is up above that 145, which I don't see it getting to. I don't see that being a risk during the duration of this trade. So I'm not too terribly worried about that. But I could come in and add in a put spread here, and let's just see what that does. Again, right now, my max profit is 173. If I come in here and were to sell a put spread now against this, I've upped that by over $100. I've upped my potential P&L by over $100. Now, with options, of course, there's always the trade-off. What did I trade off here? I traded off downside risk. I now have downside risk where I didn't have before. My break even is out there at 116. Again, when I looked at the chart, I don't know that it's going to drop below 116. It certainly could. That was a huge run up it had, but that run up was on favorable news. There was a reason for that run up. It wasn't just people bidding it up. It wasn't just shorts covering. There was fundamental changes with the company that are making it more interesting, more viable. There were some upgrades as far as the expected valuation of the stock as well. So based on that, looking at the price, I think probably coming much below the, let me get my computer's been acting a little weird here this morning. My mouse is getting below, this high here. And then we've got, of course, a little consolidation here. So I don't know. I think getting below that 115 is probably unlikely. And I may be putting this on a little bit too early as well. If I were to actually go out and attempt to do this trade, I would float this order. And again, the price here, 226 credit, 104. So that's going to be a $1.22 is what I would get for selling that spread. I may put an order out there for $1.40, $1.50. Let that set. I won't get filled unless the market moves down even a little bit further from where it is right now. And if it were to move down a little bit further and the value of that short increases even further, then I might get fill. Of course, that would make my total potential profit even higher yet. I'm going to go ahead, though, and just save this trade as though I entered it right here, right now. So I'm going to save it. And I'm going to save as a new trade. I'm not going to overwrite the existing. And I'll copy that link. I'll share the link in the description down below so that you can see. I'll share both links if I can find the old one, what this trade started off as, and then what I evolved it to by adding in that put spread. This is how an options trader can try to play or trade a range that they expect that might happen in a stock. So with that, I'll wrap things up here. Go ahead and get this video posted. I'll get that link shared. If you find this to be of value, please subscribe. Give me a thumbs up. Take care, everyone.